In today's video, we're going to be comparing Affirm stock to Klarna, which is a newly traded company that just IPO'd recently, and there's a lot of hype behind it. So if some of you are wondering, hey, that stock's down a lot based off of where it IPO'd at, is it a good buying opportunity? Well, I'm going to answer those questions in this video, so make sure you stay tuned for that. I'm also going to be comparing these companies side by side. So we're going to be looking at the technicals and looking at some different trade ideas when it comes to each company, and then also looking at the fundamentals of the company to see which one, if any, is a good buying opportunity on the dip. So with that being said, let's jump right into it. And I do respect your time, so I'm going to be leaving timestamps down below with all the different segments that we'll be covering, so you can go and look at whichever one you find the most value in. So let's get started. All right, so the first thing that I want to do is just compare these companies side by side. And if you don't know already, these companies are buy now, pay later companies, okay? So in other words, you can, buy an iPad now and pay for it later, and they get paid, whatever they agree upon with the merchants, right? So not a bad gig, but obviously one thing that I want to mention with companies like this is in the event of a downturn, right, a recession, these are going to get hit the hardest. Of course, this is in my opinion. This is not financial advice. You make your own, sound investing decisions, but just think about it, right? Private loans are some of the most riskiest loans to do, especially when it comes to a recession, and that's because people are going to pay for their home. They're going to pay for their auto loan. They're going to pay for the things that are necessary to live before they pay for, that $300 dress that they got on Affirm, the buy now, pay later app, right? So that's one thing I want you to consider. And we'll go into the charts, right? And when we do, and we look at the technicals, you can see some of the massive growth that you've seen from like Affirm. Obviously, it's been traded a lot longer, but with that being said, it can also see some big downturns, right? High risk, high reward. I need you guys to know that if you're looking to invest in these companies and or make a trade especially, right? So comparing these side by side, you can see that Affirm was founded in 2012. Klarna's been around a little bit longer, founded in 2005. Revenues, all right, you have Affirm at 2.3 billion. We'll compare these side by side on a chart, but just a quick overview. And then you have Klarna, which is 2.81 billion. So Klarna, obviously, they've been around longer. Nonetheless, moving on, you have the market cap, pretty identical, right? Side by side. And then you have amount of active customers, right? 111 million for Klarna compared to 23 million for Affirm. That's great, right? And then obviously go down to employees. Klarna, again, more employees, just the bigger company. But my question is, 111 million active customers, why are you not growing more revenues, right? Or why do you not have more revenue compared to an Affirm that has literally like a third of the amount of active customers, but they're making just as much money? Something to think about, right? They need to find a way to convert those, clients. But the last thing that I added up here is the total shares outstanding. I wanted to mention this because if you're looking at this as like a day trade, swing trade, even a long-term, short-term trade, whatever it is, right? I think this is important because you have a lot more dilution of shares when it comes to Affirm, right? 271 million compared to 34 million of Klarna. Supply and demand, right? If the demand starts picking up on Klarna, that stock's going to move a lot quickly just because there's not as much supply out there right now. But with that being said, don't get me wrong, I'm sure with this being a newer company, they're going to probably slowly be, selling shares onto the market to raise capital and whatnot as this goes. So I would imagine that number will, continue to increase. Something to keep our eyes on. So I just wanted to mention those few things to you guys real quick. Compare these companies side by side. You can see for the most part, they are pretty similar. With that being said, let's go ahead and jump into the technicals. I want to give you guys a couple trade ideas and just look at, what I would be thinking if I was considering on starting a position in these companies. So let's jump into the charts. And right here, you can see that I have the 4-hour pulled up. Obviously, as we mentioned, Klarna is a newly traded company, so there's not as much data, right, when it comes to this. but I have some lines drawn here, right? This is the first line of support that we've made so far. You can see that when we've bounced off of this before, it got bought up very quickly. And then once we broke this line of support, it dropped very quickly. Also ramped right back up to it very quickly. You get what I'm saying, right? And then now we're holding at this level. This is a pretty solid level of support right now. If you were looking to take like a long-term position, I'd have no issue starting a position right here. If we dip down, then just to keep adding at your next level, probably would be, I don't know, maybe around here is where I would add more if you were to break that support. But if we're looking at just more of a short-term trade, then with that being said, we'll zoom in a little bit. I would take a position here. I would have my stop loss somewhere around here, right? I mean, that you make that decision. I'd probably have a little bit of a tighter stop loss and just say, hey, I'm either going to get stopped out or I'm going to see all the upside, right? And you can see here, this would be an easy trade. You might lose 1.5–2% with an opportunity to make. Oh man, I don't even know. I would say, to be safe. I mean, this line I have drawn here, right, 7% to be safe, right? Like we were just there the other day. So you're losing 2% to make 7. Not a bad risk to reward. Obviously, if you ride a little bit longer, it could be a lot more lucrative, and you could just do a trailing stop loss. But nonetheless, that's what I'm looking at when it comes to making a trade on this stock and or just getting into a position based off of what we'll get into later. I just think this company is fairly valued where it's at now. I would have no issue starting a position here. All right, so moving on to Affirm. Right, we have a lot more data when it comes to this chart. It's been trading for a really long time, but you can see that it's been super bullish of lately. Wow. Like this downturn was not that long ago, right? This was when we had all the chaos in the market, right? From there, the stock reached as high as $100, up 190%, right? Like it's been so much hype in this stock, but you can see these cycles, right? Hype and then big sell-offs, hypes and big sell-offs. But nonetheless, like unless we break structure, same thing with this stock as it was for Klarna. Just for a trade idea, you can take a trade right around here. You put your stop loss below here. If we break here, we're probably going lower and then just reevaluate things later. But if not, same difference. If you were to get in even right here, I know it's a little bit higher, but hey, 3% you're risking, opportunity to ride it back up to here, 20%. Not a bad risk reward. Just an easy, simple trade if you want to look at something like that. Again, I'm not saying that this thing can't go lower. I just think that, based off of recent patterns, we're at a support level. It looks like where that reversal is kind of, where we have the sell-off and then you have the consolidation. We're waiting on that confirmation, and we kind of got a fake out breakout here. And then, it's just where the trend line has been following as well. You can see, I don't see that changing anytime real soon, but who knows? You can see that this stock, again, is super volatile, and that's what I wanted to mention to you guys. Yes, this stock is up 190%, but God forbid someone got into the stock up here. Right now you're down 16% already, right? And if we really had a decent, correction, 30–40% would not be out of the question, right? Need you to keep that in mind when we're trading stocks like this. They're just a lot more volatile, and as we mentioned, if there's any signs or risk of a recession, I think these stocks are going to see the biggest hit. Okay, so jumping into the fundamentals, total revenues, you can see right here, they both are growing total revenues beautifully, right? That is not the issue here. Revenues are growing, and when it comes to comparing these companies side by side, as I mentioned before, they are dang close. And obviously, Affirm, as of late, has been taking the lead, when it comes to growing their revenues more, but nonetheless, nothing to complain about. We're seeing a nice trajectory up for both companies. This is where there's a little bit more concerning, right, is the net income, right? We want to see the company profitable. Like, it doesn't matter if you're making billions and billions of dollars. If you're spending billions and billions of dollars, then your net income is, nothing, right? So, again, these companies, and Affirm specifically, just started going positive recently, and that's probably why you're seeing this big, influx in the stock price, right? Because they're like, oh, wow, the company's finally profitable. We see the road of growth now. I see Klarna right behind it in that argument, just because we looked at the revenues and everything. You can see the trajectory, right, where both companies are on this path of profitability, right, where the net income is increasing, right, slowly every quarter, and then where we've had a couple profitable quarters for Klarna and for Affirm as well. So that's one thing that we really want to keep our eyes on when it comes to the next earning report is, are we profitable, right? Or are we at least closing that gap and not going the opposite way, right? That would be detrimental for the stock probably. All right, so moving on to free cash flow. Wow, this was interesting, right? So Klarna, you can see massive free cash flow. Like, I don't know what happened for them to grow so much free cash flow in these quarters. I mean, you can see even previously, and then it was negative. But comparing this to Affirm, I mean, it's taken the lead substantially. I mean, it's not even a question here, right? I mean, you have $927 million on cash on hand compared to, I mean, almost nothing. So that's pretty interesting. Klarna in that aspect looking really good compared to Affirm. All right, so taking a look at the cash from operations, I want to add this slide in here. We have Klarna again, 48% of their cash coming from operations, right? And this is projected 5-year. So that's looking pretty decent. And then you have Affirm, it's been on a decline of recent. I'm not sure why, right? I mean, they were showing lots of cash from operations, and then now it's kind of taken a dip down. I'd be curious to look into that a little bit more and see what the reasoning for that is. But nonetheless, you can see Klarna has also dipped down here a few times, and it looks like 48% is definitely on the higher side of what they've had in the past. So whatever they're doing it right, and that's been increasing. And vice versa, it looks like Affirm has been declining. So we want to keep our eyes on that and see what's going on. Moving on to the next slide, we have our balance sheets, right? Klarna keeps a tight balance sheet. Not gonna lie, I would like to see obviously a little bit more free cash or just assets on hand when it comes to comparing it to their liabilities. Just again in the event of something bad happening, it's good to know that the company just has plenty of assets and cash to pay all their debts, right? But nonetheless, I mean, they are always keeping it lower than their assets. Their liabilities lower than their assets. I guess that's the most important thing. But this is even more interesting. Okay, moving on to Affirm. Wow, the blue is their liabilities. Like, holy shit, dude! Like, way more liabilities than assets. And so this is obviously not something that I'd like to see. I'm sure there's some type of reasoning for it. Maybe they're just taking or making a lot of investments right now, and it's just taking a little bit of time to pay off. But nonetheless, like, this is not giving me a lot of confidence. Again, if we were to see a downturn, holy smokes, like, I could see a company like Affirm just getting slashed. So again, I mean, these companies see massive growth when they're on the uptick, and vice versa, they can go down very quickly as well. All right, so moving on to the net profit margin, we have Klarna in the blue, we have Affirm in the orange. I mean, you can see here Affirm, taking the lead here with 7.9% total net profit margins. Obviously, none of this is really something to write home about, but we want to see it profitable. And this is the thing with companies like this, they have so many clients, like active clients using their platform, and so when they finally achieve profitability, we can really see the total revenues and net profit really increasing a lot quicker at that time. But you can see both of these companies are on the uptick, right? They're both increasing. You can see where Klarna actually just had a profitable quarter and then dipped back down, and now they're coming back up, kind of vice versa here. So, hey, it's comparable, but Affirm does take the lead there. Then moving on to return on invested capital. Again, these charts almost look identical. Not going to spend a lot of time here, but you can see that Klarna has returned a little bit more on your invested cash compared to Affirm. So one last thing that I just wanted to touch on, and I'm not doing this for Klarna just because they're not available, is just looking at the forward price to earnings of these companies. And so you can see here, looking at the forward price to earnings of Affirm, we're trading higher than we have in the past, arguably. Looks like the lowest that this traded on a forward price to earnings, keep that in mind, was a 17. We're trading at a 30 now. We were just recently at like a 37. And then you can see in the past, obviously we're trading at negatives because, the company wasn't profitable yet. Nonetheless, though, a 30 for a forward price to earnings is not terrible, right? So I don't want to scare you guys too much if you're investing in a company like this, assuming obviously that, these projections continue. And that's why I'm saying if there is a recession, that could change very, very quickly. Their projections could change very, very quickly of how much money, they're projected to make, and that could go negative all of a sudden. So nonetheless, though, looking at this, we've traded a little bit lower in the past. I just wanted to show this chart to you because I always think, this is a very, valuable metric to look at. If this was trading at like a 200 or 300 price to earnings, that would be even more fear instilled in me because I'm like, whoa, where's this growth coming from? You know what I mean? Like, it hasn't hit yet. And then so when an earnings report comes out and they don't hit these high expectations, guess what? The stock drops like crazy. And that's what you want to be careful about. But again, looking at Affirm, it doesn't look too bad when it comes to a forward price to earnings. But that's all I have for you guys in this one. I hope you found this video helpful. When it comes to whether or not I would buy the dip on these companies, out of the two, I would have to say that Klarna would probably be my first choice. And that's simply because it is so comparable to Affirm. And I feel that Affirm has just seen so much growth in its share price of recently where it seems a little bit more risky to me. On the other hand, Klarna has obviously just seen a big decline in its share price. And then based off of the metrics and whatnot, and the fact that it has like so much less shares outstanding, and the fact that it had so much more free cash flow is why I would personally pick Klarna over Affirm. But with that being said, I like both companies for a longer term picture. Again, I just wanted to mention, the short term risk with companies like this, that the stock price can just fluctuate a lot in any given day, right? I mean, up 10, 20% I've seen on some of these, depending on the news or the earnings that came out. So again, just definitely be careful with that. But if you're still here, please consider subscribing to the channel, like this video, and I'll see you guys in the next one.